The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And welcome to another excellent edition of the Power Trading Hour with me, your humble but lovable host, David White, at the headquarters of Technical Trading and Investing, TFNN.com. What do we have out here? We have a little bounce. I had news out today, but mostly it was Bernanke. And it certainly looks like he's, at least this is my reading, he thinks that he's going to be gone next year and no reason for him to take any hits. He's just going to whistle past the graveyard until someone takes over next year and would make no commitments to taper. Said it was far too early to even start talking about that. And for all practical purposes, I suspect that he is headed to the beach until the new head of the Fed is appointed next year, and he exits stage left. I have a feeling he has no desire. He's done talking. He doesn't have to go in front of these Fruit Loops in the Senate or the House ever again, and probably feeling a little freed by that. I think he'd still do the right thing, but my guess is he thinks the right thing is just to let the economy continue in a bubble, and he'll exit, and any blame will come to the next person in line, whether it's Janet Yellen or a previous guy from the Clinton administration. I'll think of his name in a minute. They keep Larry Summers. They keep talking him up a bunch, but that's kind of hard to say. I'd say it's that Janet Yellen much closer to the political ties, and that Larry Summers was a Clintonite probably means that he's not going to get the job. These guys like the hardcore, and there's a reason why several members of the Clinton administration, once they've been found out, not the Clinton administration, the Obama administration, are extremely, extremely left-wing. They even belong to the party that begins with a C. But we can only talk about that in rare instances. When we look at IBM today, it is up 3.5 points, up to $200.94. But my guess is this is the biggest distribution scam of all time. IBM continues to only make their number by firing more and more folks. Eventually, they won't be able to fire anymore, and that will be the end of it. But they continue to buy back shares. They continue to pump. Eventually, there will be the straw that breaks the camel's back. I can't really, even the charts don't tell me what's going on here, but this is not a real strong move. We aren't hitting highs with the rest of the market. Everybody knows that they're just trying to distribute as much as they can before the music comes to a stop and everybody's looking for a chair. Anyway, what else do we have going on in the marketplace? When we're looking at the S&P, we are up 8 points. We were up to 1693. The question is, what kind of volume have we had so far today? We are under 2.3 billion shares right now, so we're under 2.4. But it looks like what is going to happen? We could have this all the way to the top. We could see another 350 points. The question is, since Bernanke's decided to exit stage left, let the bubble continue. Bernanke earlier in the spring was, actually in May, was talking about the problems that continuing the QE was having. And basically he said, well, China is now pretty much fallen, so we've got to continue to pump. But again, one day you will have to pay the fiddler. And the question is it going to be several years from now? And the longer that it goes, of course, the bigger the problems will be when it's over. I think right now we're looking fairly decent. We could have a nice pullback He lets, or the rest of them let this go another year or two, and I think that 800 on the S&P is a valid number. They need to quit pushing this market with easy money. Raising the stock market doesn't do anything other than continue to make everybody feel good. I just don't believe that you can force people into prosperity. It has to be something that they chase, and just helicoptering money, probably not doing anything more than pulling a bucket of water from the deep end of the pool, bringing it back to the shallow end and dumping it in and telling everybody something has happened. Eventually, everything, including the markets, will revert to the mean, and that is the problem, is that you continue to push it farther to one side, the more it's going to go down to the other side. Not a whole lot of movement in gold. And not surprising, we've had bounces off the low here. We are kind of moving around a bit, but what is going to happen in this marketplace? You know, we got what gold up $6.90, 1284.50. Just not a lot going to happen. We've got the dollar index. I think it was up a little stronger earlier in the morning. It's up 8 cents today, but it just looks to me like we're probably not going to have big movement, maybe some individual stocks tomorrow. But my guess is that this market's really going to move probably Tuesday or Wednesday next week after we get through a few more earnings. Today, I think we're continuing to wait for Microsoft, which comes after the bell. It's at the low of the days. So people aren't real bullish trying to get into this. It did make a nice little sell signal up here the other day. It got above the previous high, which was $35.80. $35.78 on June 7th with 65 million shares. And you had basically 36 million shares on the 16th. And, for a company like IBM or Microsoft to come in and hit these things with half the volume, probably not a big deal. Now, again, Microsoft has been working on a lot of cost-cutting measures to do similar things as IBM and some of these other companies that really have quit growing. And Microsoft is basically continuing to whittle down to the bone to make sure the numbers are okay. My guess is the numbers are going to be okay. The forecast is probably going to be tepid, but the bright star on the horizon is the Xbox One for this fall. The phone business still tends to be a huge drag, and of course, as I mentioned last week, their Surface tablet that was $500 can be now had by $350, and it still looks like they have over 1 million of the 3 million they built still sitting on the shelves. So I'm not even thinking that 350 is going to be enough to push the last of those million out on the floor, especially as fast as the technology moves in the tablet business. That's kind of the death knell. I think we're probably going to see those things eventually the last day out at 250. They spent $1.5 billion in advertising to launch these things. If they would have spent, let's say, $500 million just making sure there were apps available, I think they probably would have done a lot better. But Steve Ballmer is one of the rules of technology. I think Apple's, we've seen it in it too, and that is once a technology company is run by a bean counter, officially the old CFO. I'm trying to actually go back and do research on it, but I found about 40 of companies that were like that. They have never done well. Not one of them, other than being sold to yet another company. They've never found independent ability to grow. And I think that is just the mindset of the accountants and accountant mentality that comes from a CFO position out there. It's all about managing the money. It's all about not taking risks. Unfortunately, in technology, it's all about taking risks. And unfortunately, that is a anathema to a CFO. He knows what his numbers tell him and rarely goes after that gut feeling. And, of course, almost always late to the party. So looking at Microsoft after the bell, I'm guessing that the earnings are going to come probably in line and you're probably going to see the stock sell off anyway. If they ask how many units that they have left, and it's more than 1 million, just imagine that this thing is going to continue to probably move down a little bit, a buck or two. I suspect we're probably going to see at least 32.57 again on this stock before we roll much higher. What do I see? Let's see what we have here. Wanted to see what else was moving in this marketplace. Let's see what else. Silver, COMEX silver fell a penny, not a big deal. I was looking for September copper, and it is unchanged. And I'm not exactly sure why. I bet there's mold or something in the air. And when I sit down here for an extended period, it starts to blow around. September copper was unchanged. It's at $3.13 a pound. And I'm still thinking that for a true market to really move higher, we're going to have to see copper get off these lows. And it still looks to me like we're going to be testing the copper lows down around 290 at least one more time. So I'm kind of thinking that maybe we get a decent pullback in the market yet, especially with the light volume out here. Large cap gainers out here. Johnson Controls up, was up about 7%. JCI is the symbol on that. This thing did have earnings and did well on it. Guided Q4 EPS above consensus and full year EPS above consensus. It made some money by selling off Gentex and HomeLink to Gentex this year for $700 million. So the books are looking pretty good. This thing did bust against. Let's take a little longer look at this thing and see what we have. This thing's got a long-term gap, and it touched it today. That gap, well, let's go even a little longer here. Let's see, go to 3 year. This gap happened back, what is this? Let's take a look at these gaps because they were fairly strong. Let's see, what does that look? June 20th, July 20th of 2011. This thing gapped down on 10.5 million shares. That gap has remained open. There's also one more tiny gap, just over $42. But we are just into this lower gap at the moment. And it came in, filled about half of that gap today, and has pulled back and closed below that gap. A lot of volume today, though, so let's keep a look at it. Valid breakout so far above that $38 range. We will be back in one shake of a lamb's tail.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, SanDisk came out with earnings last night, and things are not too bad. They were up 2.5% earlier, but this thing's just kind of making a little dragonfly doji out here, just under the $62 level. Probably the most interesting point is they talked about big contracts in their earnings call and wouldn't say who, so it's probably Apple. And they're now that they're able to, and more people are buying larger capacity, both phones and tablets. They're doing just a little bit better out there. Probably the same reason that MU is doing well. And I didn't see how well that was doing, but you had a lot of volume out here today. But this thing's not breaking highs or breaking lows, so not a lot of call on that. MU should trade it up a little bit. Not a lot of volume on it. I think Micron's earnings are coming up here. Guess they are June. I guess they were a month ago. I forgot about them. So they did well, but up here on so far fairly light energy off the last low, which was 12.47. I suspect this thing wants to get back down in the $10 and $11 range, and there's a huge volume day back here at $10.27, and that's on the March 22nd. I suspect we're going to get down there for just a second, and that may be the time to pull the trigger on this thing. Might be making an ABC back on the way down. But so far, energy not all that exciting on the way back up. But a lot of these, did a breakout. They broke out significantly. And on this one, you got to be looking at here to try to catch it back around that as close as you can get to that $10 level. Let's see what else we've got moving and in play. Wanted to take a look at that. Xilinx came out up about 5%. ZLNX, is it? Where's it at here on my list? Yes. ZLNX. Xilinx, nice little pop today with a decent volume also. We take a look, a little bit better look. This thing did break out and did so on decent volume, but till today it really didn't have the real feel of a follow-through. It gapped up today. This thing could pull back to probably in the, $42 range. Maybe that would be the time to start snatching this up. Maybe 41.5. Looks like it could get back into that range where we might be wanting to bite on some of these when they start pulling back. US. See if there was this TSM, Taiwan Semiconductor, also came out with their earnings. I suspect this is a better view of the world of semiconductors. That and Intel, and we'll get into Intel in a minute. This thing blew apart, of course, on earnings. EPS 10 cents. Was basically in line, but guided below consensus for the next quarter. Now, the big problem is that you've got two big companies building products out there. Intel, who's at least 12 to 18 months ahead of Taiwan Semiconductor. And the problem is, what do you do when you're that far behind? And there just isn't a whole lot that you can do. But this thing came down on significant volume. I suspect that they're going to continue to be under significant pressure because they're going to have to spend a lot more money, and they are still that 12 to 18 months behind, and at least one jump behind. Intel's already moved into the 14 nanometer technology range from the 22 that generally is the pinnacle of TSM's ability at the moment, and that is another issue is that they can't get the yield that Intel is. In fact, when you look at Intel, you think of them as a processor company, and they make great processors. Are the ones from AMD that much inferior? The answer is no. What happens is because of their procedures in manufacturing, they are just so much better. They can make them faster because the yield's so much higher. The costs can be much lower, and just a variety of things. We're going to look at Intel when we come back, but this is probably a better look at the semiconductor market. And we'll look at the SMHs when we come back.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
On the way back from lunch, I had to stop into the AutoZone on the way home, and I didn't think there was any music as bad as disco music, but I may have found some that is equally as bad. There's Zydeco music, which I think, probably the first 15 Zydeco songs were probably inventive. After that, I think they all sound the same. I think you could play 15 Zydeco, the best 15 Zydeco songs, and past that, you never say that anything was inventive or better. And I think I found a similar genre, but even worse than just Zydeco music, which is just repetitive, and that is actually grinding music, and it's this ranchera stuff. Maybe it was the area I dropped in back on my way from the doctor's, but this ranchera music, it's an abomination. I thought the waterboarding was tough on people. I think if you'd play this music also, maybe backed up by Donna Summers or some of the other bad 80s, early 80s disco music, maybe we could get Al Qaeda to just buckle. I think, but this ranchera music, very close to it. Boy, I think if I ran AutoZone, I think unless the AutoZone was actually in Mexico, I'd probably ban it. Oh, just horrifically bad music. Anyway, we're looking at the semiconductor holders after Intel came out and some of the other ones. The chart sure did show this fairly accurately. We had some nice volume off the top last time in the semiconductor. That was off the June 4th high. And this thing, it did continue to move down. Let's try to get a little better view of what we had out here. Yeah, there we go. Energy to the downside was about 20% higher. If you look at the power law vector indicator numbers, 2 down, 1.6 up. We tested the previous high out here June 4th, $39.28. This thing, it did break above it with 829,000 yesterday, or the day before yesterday, 1.5 million shares yesterday, and of course rolled over mostly on the Intel news. This certainly has a setup where this thing could be trading back into this 36.5 level, where I think we're going to probably see a lot of turnaround in stocks, in semis too, like Intel. So I'm looking for these things to reggaeton. That's it. Thanks. I didn't even know what it was called. All I know is it was just horrible, horrible music. Thanks for Disco Steve, who knows horrible music, and I just knew that he would know other horrible music also. Just horrifically bad. You might as well just get a hammer out and hit your customers on the forehead, and I think it probably saps IQ points the longer you listen to it. Anyway, Intel Corporation came out with earnings. I have no big surprise out here. PC sales still headed down on fairly a decent volume out here, but this thing looks like it could find some decent support down around 22 to 21.5. Apparently, Disco Steve says every song is redundant. The new Spanish thing. Ugh. Just horrifically. Reggaeton. I've heard somebody say that before. I just had not experienced it in first person. Anyway, Intel out here, just coming down extremely strong out here today. Well, I wouldn't say extremely strong, but decent volume out here. But this thing's probably coming back to that $22 level. There's some things that I'll be talking about in the Tech Insider tomorrow about where I think the bottom in Intel actually will be and why, and how that thing and why things I think could change to the upside for Intel over the fall. Now, other stocks of interest after the bell tonight is going to be Google. This thing has also tested its highs. It's back into the trading range. The last high was out here at 920.60, May 20th, and 3.9 million shares got into it with half the volume. It has pulled back. It has given a valid sell signal. The energy wasn't all this exciting on the way back up. It took a long time. The question is, what do they, and this is where earnings is always kind of a crapshoot on some of these larger companies. How much can they backload additional quarters in the future for the money they lost mostly in Motorola? That doesn't seem to have turned around this quarter. So they're going to be looking at what they can actually do. Some of the Motorola phones are just now showing up at Google's headquarters. And it just doesn't look like they're going to really have the kind of volume to ever make that $8 or $10 billion buyout of Motorola. But for the most part, that was always a buying of patents issue, and of course, getting that portfolio to make the whole Android thing work. And even if they never make any money off of it, it has been, for me, a wild success because they didn't let Apple just run off and own the entire game. If Apple would have continued being the only game in town, it would have been easily a thing to axe Google out of online and mobile searches. And probably, I've never heard it said better by Larry Ellison of Oracle. He said that it's not so much important that we win as others lose in technological warfare. And I think Google took a page from his art of war translation in business. And but we've seen this thing actually give a sell signal. I could not recommend holding this thing long through it. It's done everything that you would ask on a chart to be for sale. And if it does move down, if we look at like a 9-day moving average or something, this thing looks like it could close down below that today. So we've got to be very wary of this thing moving back down. It's been fairly weak for a while now. Could they get another 3 months out of this thing? The answer is, how far do they want to push the numbers? And anybody that's been around Wall Street for a while knows just that they can put these things off 3, 6, 9 months into the future if they want. They can front load sales. And Google's a company that really hasn't ever had to resort to that. But certainly with the amount of cash flow they have, could. So it's going to be hard to know what they plan on doing. I'd rather wait for earnings to come through and then react and try to anticipate what they can do with all that cash floating around. So what else do we have going on here? I wanted to look at a few other stocks out here. So let's take a look at them. XLK, looking at some of these ETFs. The technology select sector was getting up very close to its previous high, 32.31 on May 20th, had 17 million shares. Didn't get to it, but 12 cents shy yesterday, and 10 million shares closing back into the trading range today. And I think 7 million shares is probably enough for me to say that at least for the short term, we've got a top in technology. SLB is another one out here. This thing kind of interesting in that it's getting back into its high volume down gap. Depending on which one you want to look at, it's at least 9.3 million shares. That gap happened on March 18th? Yeah, March 18th. And 9.3, we're getting, it did get with some nice volume back in here on May 21st for its high. And what do you have? Yeah, 9.9 million shares on the May 20th. But, it just couldn't handle it. Now we had 6.6 million shares yesterday, 3.5 million shares today. This thing looks like it's a lot of these are filling their gaps, but filling it with extremely light volume. Let's see what else we have. IWB. This is the iShares Russell 1000. This thing is up here at its highs. Very, very light volume so far today, so we'll have to see how this thing closes. But it's gone above today, and we'll see how it closes. The May 22nd high also at $93.93 that had 2.2 million shares in it. Yesterday we just had 387,000 shares. Got about basically that same thing today, and just doesn't look like we're having any kind of real juice up here at these levels. Back to the we're pushing about 2.5 billion shares today. So for at these highs, not a singing endorsement of what's going on around these highs. What did I want to look at here? Oh, I know what I wanted to look at. Hang on just a second while we bring this up, and we'll look at it. Grand share. Okay. Wanted to look at how some of the other stocks were reacting on the news. Qualcomm, probably interesting in that it's down at 2.5%. Let's go to it, Qualcomm. And I think a little bit is that it was going to be trading with Intel to some extent. What can you say? This is probably going to be this and ARMS Holdings probably going to be the two stocks hurt the most by Intel getting into the mobile game space, the mobile chip space. It's down on fairly decent volume, and I think some of this has to do with the discussion on the earnings call from Intel and their long-term plans for entering mobile and being able to supply chips that use a whole lot less power. All these companies, as we talked about Taiwan Semiconductor, do use them to build any chips that they design, and that just comes back to the fact that the smaller the chip you can build, the less power it will use. Anyway, Qualcomm things down. Volume did pick up from yesterday. It kind of gotten into that 62.5 that had acted as a resistance level. And you had some decent volume down here at this gap that exists. Let's take just a little longer look at this thing, if we can. This gap up looks like it's getting pretty much filled, but going to look at fairly decent support level. So might be looking at a buy on Qualcomm out here, although I'm not looking for it to go back and hit the high. But on November 8th of last year, this thing rocketed up with 32 million shares, and it's back down and starting to fill that gap. The gap actually goes all the way down to $58. But it came in with 24 million shares. We've had our first little bounce off this destruction from the highs at 68.50, and I think we're probably going to be coming back into that 58.5 level. And again, you're probably going to see a lot of that act as support, and we'll be taking a lot of look at that in the future. Okay, what else do we have out here I wanted to look at? PETM, we've been talking about that, looking like it was making a high. It has continued to kind of sell off to these highs. It's up, or what did test its previous high of September 10th at 72.75, 4.1 million shares. It's actually went through that on July 16th with 1.1. So basically up here at 25% of the volume. Very hard to keep a stock up like that. Always kind of reminds me of Jaws, where he had 2 barrels in him, and then he put 3 barrels in him, and then he put 4 barrels in him. No shark could stay down with 4 barrels. And eventually the shark, of course, pops back up to the top. But to me, it certainly looked like PetSmart was trying to stay down with 4 barrels in it, and just that kind of volume. It is rare to see company continue or stock continue up through it when the volume is that big of a change. We looked at Schlumberger, looked at Google. Let's look at CVS, and this is another one up here hanging at its highs with very light volume. It tried to go through today yet again. Volume very light. Even if you look at the past 5 days, the highest volume was 4.2 million shares. It had a high of May 28th. That volume was basically 6.2 million shares. You had just a few pennies below it on 5/14 of 8.4 million shares, and that's what I'm using. I think this thing needs 8.4 more to break out. That we have just under 3 million shares today. That it did try to go higher. It did pull back in. Is a problem for some of these. I don't know if it's got earnings coming up or not. Let's take a quick look at that. Let's see. August 6th for CVS. So a lot of these stocks probably can hang out at these levels a little bit longer, but just not a lot of volume to make us think that CVS is very strong at these levels. And again, market's kind of on hold till we see earnings after the bell. We're up 10 points on the S&P cash with 2.6 billion shares on the consolidated New York Stock Exchange tape. We'll be back in a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there. Whether it be our health, career, or our finances, some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Oh, it's okay. I was testing. Did you guys hear me? Okay.
Numbers. Guidance is down, I believe. Printing off here last at 53.46, down $3.92, almost 7%. And of course, a lot of this has to do with the guidance going forward. And I actually bought the first thing off of eBay that I needed about a week ago in several years. Used to use it a absolute great deal. I used to be buying parts when I was racing motorcycles almost every week. I always had scanners to find out any parts that might be available for my race bike. So when I wadded it up, I'd be able to put it back together. Shocks, forks, engine parts, gas tanks, rear subframes, clip-ons, windshields, bodywork. I wadded the thing up a few times. it's always be able to put it back together, but certainly was nice that you could go to eBay and buy fairly almost all the spare parts you needed off of eBay and have them ready to go and get back to your pit box and put the bike back together. But I looked at it just not near the kind of action that used to be on eBay, and I bought a cable for about $9 that wasn't readily available, and it still worked fine, but it got to make me think that it's still a problem. PayPal, of course, owned by eBay, accidentally sent $92 quadrillion to a man, and his bank balance still showed zero. He was kind of upset that he was broke, but they said that they'd make a donation of, I think, $1,000 to any charity he wanted for the problem that it caused him. But it continues to, like a lot of these, PayPal, I think, has just been stagnant. It really needed to probably go on the bandwagon of something like Square, and I think Square continues to gain ground at PayPal's expense, but PayPal is still used around the world, and probably getting a little bit better, but not as good as Square in accepting credit cards. And PayPal still hasn't made that jump where you can use it ubiquitously other than on the internet. If you can walk in and pay with it at Starbucks, probably a much bigger deal. And, of course, Square is being pushed by the CEO of Starbucks. So you're starting to see that adopted into mainstream purchases where PayPal just really has never made that leap. But guiding down mostly problems with eBay. In my opinion, they ask way too much of their vendors and want to cut, and that's cut down a great deal of the amount of stuff on their site. Anyway, he came out with numbers down on monstrously high volume. In fact, let's see if this thing actually even has higher. Yeah, it has one more higher volume day. And this thing, it did break out back at the $45 level. Let's take a quick look at that. Yeah, it's broke out on July 19th, 2011, with 35 million shares, and we're probably pushing that today. So enough of volume strength down, and if it goes back to that high volume move it has, it could get back all the way to the $40 level, maybe 38s. I have to look back in there, but got a couple of gaps that are open. Looks like it, if it continues with that kind of guidance next quarter, we could probably see this thing make it back into the 38s. Anyway, you have a great and safe day. See you tomorrow. Same bat channel, same bat time at TFNN.com.